Welcome to Voyage Daily Tech, the most important news personalized for you every day, supported by Voyage.com.
After listening to today's news, you'll know first $4 trillion AI data center boom fuels AI-driven inflation, threatening to burst the tech market bubble. We'll analyze why this spending spree is a turning point and how it could force central banks to raise interest rates, crushing tech stocks. Second, Samsung's $800 million AI device plan challenges Apple's privacy-first strategy, but a massive memory chip shortage threatens its ambition. We'll explore how this ambitious cloud AI strategy could reshape the smartphone market and what an inevitable price surge means for consumers. Third, Samsung and LG Display are in an all-out war to fix OLED text blur, introducing new panels that challenge Mini LED's brightness dominance. Today, we'll take a closer look at their competing technologies and what this leap in clarity and brightness means for the future of gaming monitors. Fourth, Elon Musk's Starlink deploys in Venezuela, signaling a new era of satellite diplomacy and sparking a global race for satellite network control. In this episode, we'll break down this rise of corporate state departments and what it signals for the new space race between the US, China, and Europe. Fifth, Samsung unveils the Z TriFold, a dual-hinge Halo product that transforms into a tablet, but its success hinges on solving the Android software problem. We'll examine how this expensive hardware gambit aims to create a new device category and why its fate depends on broad developer adoption. The AI boom that's fueling record stock prices may be the very thing that brings the entire market crashing down. A while back, we talked about how the picks and shovels side of this boom and a wave of mega deals were propelling markets higher today. The worry is a new twist to that story. Continuing our last discussion about record AI capex financed by a surge in data center debt and a new internet landlord class, investors are now sounding the alarm on a hidden threat they're calling AI-driven inflation. The core of the problem is the multi-trillion-dollar race by giants like Microsoft, Meta, and Alphabet to build massive new data centers. So the thing is, this isn't your typical inflation. This is cost-push inflation driven by a massive concentrated demand for physical things, electricity, land, water for cooling, and of course, the most advanced computer chips on the planet. According to Deutsche Bank, capital expenditure on these AI data centers could reach as much as $4 trillion by 2030. A while back, we noted projections as high as $1 trillion. This newer estimate is materially larger and speaks to how fast the build-out assumptions are escalating. To give you a sense of scale, at the peak of the dot-com bubble, all the spending on fiber optics and servers topped out at about 1.2% of US GDP. The spending on AI infrastructure by just the top tech giants is projected to hit that same 1.2% of GDP in 2025. We are seeing a build-out on a historic scale, and unlike the dot-com era's unprofitable startups, today's spenders are profitable giants, which means the real economy footprint and its inflationary bite shows up faster, as we've discussed before. This building spree is gobbling up energy and advanced chips at an unprecedented rate, causing supply bottlenecks and making costs spiral. We also flagged reports a while back that roughly 95% of businesses are seeing zero return on their generative AI investments. If that persists, rising input costs get harder to absorb, increasing the risk of pullbacks, and the numbers are staggering. Projections show that by 2030, data centers could consume up to 12% of all electricity in the United States. In Virginia, a major hub for data centers, they already accounted for 21% of one major utility's power sales back in 2022. This isn't just a corporate problem. It strains public grids and can lead to high utility bills for everyone. At the same time, this arms race for chips is creating huge winners. A company like Nvidia, which makes the essential GPUs, is seeing record profits, while the tech giants themselves are paying a premium. A while back, we called this the picks and shovels trade. Remember how optics supplier Lumentum soared, so the upstream winners are clear even as buyers pay up? There's even a hidden geopolitical premium being paid as building chip factories in safer places like the US can make the final product 5% to 20% more expensive than those from Taiwan. A Morgan Stanley strategist now predicts US inflation will stay above the Federal Reserve's target until the end of 2027, partly because of this heavy corporate investment in AI. Layer that onto the debt-fueled pipeline, we discussed data center bond issuance nearly doubled to about $182 billion and higher for longer rates would bite twice on inflation and on financing costs. This is where the situation takes a more complex turn. The whole promise of AI is long-term deflation, that it will make businesses so efficient, it will drive down costs for everyone. The problem is the timeline. Experts project we won't see those major productivity gains until 2026 or 2027. So the question is, are we facing several years of AI-driven inflation before we ever get to the deflationary benefits? This all sets up a major conflict. While markets are betting on interest rate cuts, these new inflationary pressures may force central banks to slam on the brakes or even start hiking rates again. As one head of multi-asset at Royal London Asset Management said, you need a pin that pricks the bubble and it will probably come through tighter money. Tighter money would crush speculative tech stocks, raise funding costs for AI projects, and hammer profits. For hyperscalers, shifting risk to private equity and that new landlord class we covered, tighter money also means pricier leases and higher cap rates feeding straight back into project budgets. And the people managing the big money are getting nervous. An executive at Mercer, a firm that advises institutions running a combined $16.2 trillion, said, what keeps us awake at night is that inflation risk has resurfaced. Another portfolio manager at Carmignac warned that this inflation risk remains very underappreciated by the markets. We saw hints of this fragility a while back when rumours around a single $10 billion data centre deal hit Oracle and dragged the Nasdaq. The first cracks are already showing. Oracle's shares plunged last month when it revealed its spending had soared. The conclusion from insiders is stark. A former senior executive at Meta stated that as memory chip cost inflation pushes up prices for AI groups, investors' returns will fall and the flow of money into the sector will be reduced. The AI gold rush, fueled by hype and easy money, is now facing a head-on collision with the basic laws of economics. And as we noted before, it's hitting in a K-shaped way. Premium buyers keep racing ahead while everyone else feels the squeeze through higher bills and sour sentiment. We were just talking about the insatiable demand for chips in the data center. Now, let's see how that same pressure is playing out in your pocket. Samsung just made a move that could change the entire smartphone landscape, announcing a plan to double its AI-powered devices to an astonishing 800 million units. This isn't just about new features. It's a direct shot across the bow at Apple as Samsung openly seeks to reclaim its lost crown in the global smartphone market and fend off Chinese rivals. This situation presents a fascinating duality. We're seeing Samsung leaning on Google go all in on powerful cloud-based AI. This lets them deploy advanced features very quickly. At the same time, Apple is famously sticking to its on-device AI strategy, processing tasks locally on the phone's chip to prioritize user privacy. It's a classic battle, speed and power versus privacy and security. And the alliance behind this is huge. The Galaxy AI features are largely powered by Google's Gemini, giving Google a massive advantage in its own war with OpenAI. Interestingly enough, this partnership gives Google access to hundreds of millions of devices, which is an enormous platform to train and improve its AI models. We previously analysed how every watt and bit of bandwidth matters when HBM is sold out. The latest development is that pushing more workloads to the cloud leans even harder on that scarce memory pipeline, exactly where Samsung has been trying to flip the scoreboard against SK Hynix. The competition is so fierce that reports claim OpenAI's CEO issued an internal code red after Google launched its latest model. Samsung's co-CEO, TM Rowe, went on the record with a stunningly ambitious goal, stating, "We will apply AI to all products, all functions, and all services as quickly as possible." And when he says all products, he means it. We're talking about making your phone, your TV, and even your refrigerator work together with one seamless AI brain. This is incredibly difficult. It presents huge technical challenges in making different types of devices talk to each other perfectly, something even giants like Amazon and Apple are still trying to master. As we've discussed before, Samsung's secret weapon is being an integrated device manufacturer, memory plus foundry, under one roof, which gives it unusual leverage to coordinate silicon supply with product rollout. He predicts that even if AI seems doubtful now, it will become widespread within a year, an incredibly fast timeline. Consumer awareness of Samsung's Galaxy AI brand has already skyrocketed from 30% to 80% in just 1 year. But there's a huge obstacle in their path. A global, unprecedented memory chip shortage is hitting the industry. The demand from AI data centers is so intense that by late 2025, prices for DRAM memory are projected to rise by up to 171%, and NAND flash memory could spike by an unbelievable 246%. We previously called out the memory squeeze turning DRAM into a high-margin growth story. This is the silicon reality crashing into Samsung's AI ambition. Rowe admits no company is immune and that a surge in product prices is inevitable. Remember, SK Hynix has been the HBM king and even warned competition is intensifying, while governments like the US, with CHIPS Act, grants are racing to localize memory capacity because so much production sits in South Korea. All of that matters as Samsung tries to feed both data centers and hundreds of millions of AI phones at the same time. This puts Samsung's entire high-stakes plan under immense pressure, creating a high-wire act between ambition and reality. While Samsung pioneered and still controls nearly 2/3 of the foldable phone market, this new strategy is a far bigger gamble. After all, for years, foldable phones have been a solution in search of a problem. But AI could be the killer feature that finally makes them essential. Imagine using the larger screen for advanced multitasking, where AI can summarize a video on one half of the screen while you take notes on the other. That's a unique experience you can't get on a standard phone, and it might just be the key to making this gamble pay off. If Samsung can align that form factor advantage with the chip muscle we've been tracking, the payoff gets real. The company is leveraging its partnership with Google to wage a two-front war against Apple and its other competitors, all while navigating a critical component shortage that threatens to derail the entire campaign. Samsung is betting its future on AI, and the outcome will define the next era of personal technology. Speaking of fierce rivalries, let's shift from the smartphone wars to the screen world, where LG Display and Samsung Display are in an all-out battle to fix the one nagging flaw in their otherwise perfect OLED gaming monitors. For years, users have complained about blurry, fuzzy text, especially on ultra-wide screens. Now, get this wasn't an accident, it was a compromise. For years, OLED manufacturers couldn't use the simple, clean grid of red, green, and blue subpixels, what we call an RGB stripe that your standard LCD monitor has. The problem was that the blue OLED subpixels degrade much faster than the red and green ones. To extend the life of the panel, they use clever but messy layouts, like the pentile matrix, which shared subpixels. It worked for longevity, but it's what caused that annoying color fringing and fuzziness on text. Now, both companies are racing to solve it with the exact same strategy. The core of the battle is a new technology called RGB stripe, a layout that promises to make text on an OLED screen finally look razor sharp. This is a massive shift because for decades, the software on our computers, like Microsoft's ClearType, has been designed to make fonts look smooth by talking directly to that standard RGB stripe layout. When OLEDs came along with their weird subpixel patterns, the software got confused and the result was that blurry text. By finally adopting the correct hardware layout, these new panels will just work better by default, letting the font rendering tech do its job properly for the first time on an OLED. This is a massive shift, with both companies moving away from their signature panel designs to adopt this new standard. And the race is already on. Samsung Display just announced it's already mass producing the world's first 34-inch 360Hz QD OLED panel using this new structure. Samsung's approach here is called QD OLED, which stands for Quantum Dot OLED. The magic behind it is that it uses a blue OLED backlight and then uses quantum dots, tiny semiconductor particles to convert that blue light into pure red and green. This method gets rid of the traditional color filters, which means more light gets through, resulting in incredible color purity and brightness. They're not waiting either. They've been supplying these next-gen panels to major brands like Asus and MSI since December, but don't count LG out. They're firing back, debuting the world's first 27-inch 4K OLED monitor panel that also features the coveted RGB stripe structure. If that was just the appetizer, the main course is just being served. LG is doubling down with a second killer technology called primary RGB, Tandem 2.0. So what is Tandem 2.0? It's a completely different strategy from Samsung's. Instead of using quantum dots, LG is literally stacking multiple OLED emitting layers on top of each other. Think of it like a multi-decker sandwich of light. What's remarkable is that this not only dramatically boosts the brightness, but by spreading the workload across multiple layers, It also significantly increases the panel's lifespan and reduces the risk of burn-in. The trade-off? It's a more complex and likely more expensive manufacturing process. This isn't just about sharp text, it's about raw power. This new tech is designed to fix OLED's other historic weakness, brightness. The number they're targeting is an absolute bombshell. LG is promising monitor displays that can achieve a peak brightness of up to 1,500 nits. That number is a direct shot at the current king of brightness, mini LED technology. For a long time, the one undisputed advantage mini LED had over OLED was its ability to get incredibly bright without any risk of burn-in. With OLEDs now hitting these brightness levels while also fixing text clarity, that advantage is shrinking fast. The battle lines are drawn. Samsung is pushing speed and is already shipping to manufacturers, while LG is countering with a massive leap in brightness on top of fixing text clarity. This two-front war means the next generation of gaming monitors won't just be an incremental upgrade. It will be a complete revolution in clarity and power, driven by the industry's fiercest rivalry. As these two giants converge on the same core panel technology, the battleground shifts. Monitor brands like Asus and MSI can't just rely on having a Samsung panel or an LG panel anymore. They'll have to compete on everything else: better cooling, unique software features, more advanced connectivity, and even special anti-glare coatings. This rivalry isn't just giving us better pixels, it's forcing the entire industry to innovate. And that means we, the consumers, are the ultimate winners. From a war over pixels on a screen, we now turn to how technology is becoming a powerful asset in global conflicts. Just days after US airstrikes and the capture of leader Nicolas Maduro, Elon Musk's Starlink is beaming free internet into Venezuela. Following the US operation, reports showed power and internet connectivity collapsing in the capital, Caracas. Almost immediately, Starlink announced it was providing service credits to both active and inactive accounts across the country, restoring a vital link to the outside world. However, if you zoom out, you'll see another layer of strategy at play. While this seems like a lifeline, it also raises serious questions about what's called digital sovereignty. When a foreign company, especially one from the nation that just conducted military strikes, becomes your country's main link to the world, who really holds the power? Who owns the data flowing through those satellites? And who controls the off switch? The US Cloud Act, for example, allows American authorities to demand data from US tech companies, no matter where that data is stored. This could create a new and powerful form of digital dependency. This is not just a benevolent act, it's a pattern we've seen before. From a business perspective, offering free internet isn't charity. It's a high-profile demonstration of capability designed to win future multi-billion-dollar government contracts. Remember, SpaceX has already secured a $1.8 billion classified contract to build a spy satellite network for a US intelligence agency. These crisis deployments are the ultimate sales pitch. Venezuela is not the first conflict zone where Starlink has been deployed. The service became a critical tool in Ukraine after Russia's invasion, blurring the line between a private company and a military asset. This effectively makes Starlink what experts call dual-use infrastructure. It serves both civilians and the military. This decision brings both benefits and comes with inherent risks. Because under the international laws of armed conflict, an object that makes an effective contribution to military action can be considered a legitimate military target. This raises a terrifying question. Does using Starlink to support a US-backed operation make its satellites fair game in a conflict? An attack on a Starlink satellite wouldn't just be an attack on a private company, it could be seen as an attack on the United States itself. That power became shockingly clear when a biography revealed Musk had personally denied a Ukrainian request to activate service over Crimea, single-handedly thwarting a planned military attack. This incident revealed a private citizen acting like a Secretary of State, making foreign policy decisions that directly contradicted the goals of a US ally. This is the new reality of a corporate State Department where a CEO's personal judgment can alter the course of a war, operating outside the traditional chains of government command and accountability. The incident triggered a US Senate probe into the serious national liability issues of a private citizen wielding that much influence over a war. The Pentagon's solution? In June 2023, it brought Starlink's activities in Ukraine under its formal oversight through a contract with SpaceX, effectively making the company an official military contractor. This all points to a stunning new reality. As one global geo macro strategist at BCA Research put it bluntly, quote, "It is highly likely that Starlink will become available for free everywhere where the US is involved in an antagonistic relationship with the regime." This isn't just about restoring connectivity. It signals the dawn of a new era where private satellite constellations are becoming powerful instruments in global geopolitics. What really brought this to a head was the reaction from other global powers. Governments from the European Union to China are now racing to build their own state-backed alternatives, sparking a new kind of space race for control of the sky. Here's what that race actually looks like. China is building its own state-owned constellation called Guowang with plans for 13,000 satellites. But they have a problem. They are still relying on single-use rockets, which makes deployment much slower than Starlink's, which uses reusable rockets to launch satellites in huge batches. Meanwhile, the European Union is pouring billions into its own system, Iris Squared, aiming for a secure, independent network. Venezuela isn't just a crisis zone. It's the first real-world test case of what some are calling satellite diplomacy, and it is accelerating a global competition to control the communications infrastructure of the future. Speaking of tech giants making big moves on the world stage, Samsung is back in the spotlight, this time with a truly audacious new piece of hardware. It just built a phone that unfolds not once, but twice. It's called the Z TriFold, and it's a device that could make every other foldable phone on the market look obsolete. This is a genuine engineering feat. Adding a second hinge doesn't just double the complexity, it increases the mechanical challenges exponentially. You see, every fold puts stress on the display and the internal components. With two hinges, you have multiple new points of potential failure and material fatigue. Samsung uses an inward folding design, which is great for protecting that delicate, flexible screen when the device is closed. The trade-off, however, is that it puts more strain on the internal parts and creates a thicker device. It's a massive balancing act between durability, thickness, and screen protection. This isn't just a gimmick. One journalist who spent weeks with a single hinge Google Pixel 10 Pro Fold said they could count on one hand the number of times they even opened it. But after just 1 hour with the 2-hinge trifold, they were ready to trade their old device in. The urge to unfold it is just that strong. When fully open, it's a legitimate tablet. But what about the price? Well, the current single hinge foldables already cost around $2,000. The price for the Z TriFold isn't public yet, but inside reports are using one specific phrase to describe it: hella expensive. Actually, this isn't a phone for everyone. At a price that could approach $3,000, Samsung is playing a very specific game. Research suggests this is what's known as a halo product. It's not meant for mass sales. Instead, it's designed to showcase technological power and reinforce Samsung's brand as an innovator. The real target market is a small niche of executives and tech enthusiasts, so-called prosumers, who are willing to pay a huge premium to consolidate their phone, tablet, and laptop into a single cutting-edge device. It's a similar strategy to Apple's Vision Pro. Create an ultra-premium device that signals the future, even if very few people can buy it today. So what's the real end game here? The answer is in a feature called DeX. On the TriFold, DeX transforms the device into a standalone computer, complete with windowing and multitasking. It's not just about a bigger screen, it's about a more powerful experience. The dream of a single device that can do everything is a recurring one in tech, but it's a dream that has mostly failed. Remember the Microsoft Surface or even the iPad with a keyboard? They tried to merge the laptop and tablet, but they've remained niche. The biggest hurdle, believe it or not, isn't the hardware, it's the software. For the TriFold to succeed, apps have to seamlessly adapt between a phone screen, a small tablet screen, and a giant desktop-style interface. If that experience is clunky or inconsistent, the whole concept falls apart, no matter how cool the hardware is. This all started clicking into place when Samsung's smartphone product head, Blake Geyser, confirmed that there's a specific version of Adobe Lightroom being developed just for the TriFold. This isn't for checking email, this is for real work. But having one or two big name apps like Lightroom on board is a great start, but it's not enough. The real challenge, and the one that has plagued Android tablets for years, is getting the entire ecosystem of thousands of developers to optimize their apps for this new 3-stage form factor. Without broad developer support, users will be left with a beautiful, expensive screen running apps that are just stretched out phone apps Samsung is providing guidelines for developers, but the big question is whether there are enough incentives for them to do the extra work. The battle for the future of your pocket is heating up. Samsung isn't just challenging other phones, it's challenging the need for a separate tablet or even a laptop. This device is a grey area, a new category blurring the lines between a tablet, a smartphone, and a computer. And it's a sign that the mobile device wars are about to get a lot more interesting.
That's it for today on Voyage Daily Tech. Follow, share, and stay tuned for daily updates coming your way tomorrow.